Let's talk about something that trips up so many leaders: cash. It's the ultimate reality check for your organization, and getting a handle on it, well, it can change everything. So picture this, right? Your team just crushes it, a record-breaking quarter. The profit report looks incredible. You walk into your boss's office, all excited, thinking, okay, it's finally time to hire that person we desperately need. And they hit you with, sorry, cash is just too tight right now. And you're just standing there thinking, how? How is that even possible? If you've ever felt that kind of whiplash, that frustrating disconnect, you're in exactly the right place. We are going to close that knowledge gap for good. All right, so here's how we're going to break this down. First, the big idea: profit versus cash. Then we'll get into reading the story of cash, look at some real-world scenarios, and I'll give you a leadership playbook. We'll also cover some common traps and wrap up with one simple next step. All right, let's jump right in. This is the core concept, the big idea. That's going to change how you look at your organization's finances for good.
You've probably heard this before, but it is one of the truest things ever said about finance. See, profit, that's an opinion. It's an accounting measurement full of estimates, assumptions, and all sorts of rules about timing. But cash? Oh, cash is a fact. It's the real, hold, hard money in the bank. It's the ultimate truth teller, and it does not lie.
And here's the bottom line. You can't pay your people with profit. You can't pay your vendors with profit. You can't keep the lights on with profit. Profit is just a number on a piece of paper, an idea based on accounting rules. Cash is what you actually use to run the business. Look, you absolutely need both to be healthy, but let's be crystal clear. You cannot survive without cash, period. Okay, so how do we actually see this story? Well, it's all laid out in a report called the Statement of Cash Flows. And I know, the name alone sounds intimidating, but stick with me here, because it's really just a story told in three pretty simple parts. Part one, and honestly the most important one for you as a leader, is operating activities. This is your reality check. It answers one simple, crucial question. Is the thing we do every single day actually making us cash, or is it burning through it? If you see a positive number here, that is a fantastic sign of a healthy operation. Next up, part two is investing activities. This is all about the big bets your organization is making on its future. Did we buy a new building, a new piece of equipment? Did we sell off something old? This section shows you exactly where the big money is going for long-term growth. And finally, part three, financing activities. This is the funding story. It tells you where the money is coming from to run the whole show. Did we borrow money? Did someone invest in us? Did we pay back a loan? It's that simple. Okay, so we've got these three parts, but if you're thinking, just give me the one number I need to care about, this is it, the ultimate metric. It's called free cash flow. And trust me, this is the number that smart leaders, investors, and lenders are all watching like a hawk. So what is it? It's pretty straightforward. You take all the cash that came in from your day-to-day operations, and then you subtract the money you had to spend on the big, essential stuff to keep the business running and growing. You know, things like new equipment or major repairs. Accountants have a fancy name for it: capital expenditures. Whatever is left over, that is your free cash flow. It's the cash that gives you options. If it's positive, you can grow, you can innovate, you can build a safety net. If it's negative, well, you're pretty much in survival mode. Okay, that's enough theory. Let's make this real. I'm going to walk you through a couple of stories where this whole profit versus cash thing becomes, well, painfully clear. First up, a business example I call the profitable payroll panic. Imagine your team has a killer quarter. Sales are through the roof, profits look amazing. But you gave all your new customers 60 or 90 days to pay. So that money, that cash, isn't going to hit your bank account for months. But payroll? That's due next Friday. And your suppliers want to get paid now. All of a sudden, you're staring down a cash crisis, even though on paper, you look like a superstar. And let's look at a ministry example, one that's probably all too familiar for some of you. It's the strong pledges, weak collections problem. A ministry launches a big building campaign, and the pledges just pour in. It feels like a massive success. But here's the catch. Those pledges are promised over the next 3, 4, 5 years. The construction bills, they're due this month. And if the cash coming in doesn't keep up with the bills going out, the work grinds to a halt. Credibility gets shot. Look, faith is absolutely essential, but it has to be paired with disciplined cash planning. So how do you fix this? How do you take control? Let's get super practical. Here is your leadership playbook, and I've broken it down for you whether you have a finance team or you are the finance team. Okay, so if you don't have a finance team, it's all on you. Here are 3 habits to build starting today. Number 1, always ask when first. Not how much, but when. When does the cash actually come in, and when does it have to go out? Timing is everything. Number 2, treat growth like a cash decision, because it is. Growing almost always eats up cash first. You have to hire people or buy inventory before you make the sale. Plan for that. And number 3, just delay big purchases. Buy that shiny new thing when the bank account is strong, not just because the profit report looks good. Now, if you do have a finance team, your role changes. It's about leadership. First, demand the story. Don't just look at the numbers on the cash flow statement. Ask your team why. Why did it go up? Why did it go down? Get the narrative. Second, you have to force the trade-offs. If sales wants to give a customer 90 days to pay to get a deal done, your job is to make sure everyone in the room understands what that does to our cash position. Make it real for them. And third, make cash a shared language. It's not just a finance thing. It has to be an operating discipline for everyone. All right, as you dive into this, I want you to watch out for a few common traps. I see leaders fall into these all the time. Trap number 1, believing that profit solves all your problems. It doesn't. You can be the most profitable company in the world on paper and still go bankrupt because you couldn't make payroll. It happens. Trap number 2 is making spending decisions based on profit. You see that big number on the P&L and think, awesome, we can afford it. But the question isn't, can we afford it? The question is, will the cash be in the bank when the invoice is due? Totally different question. And trap number 3, this one's maybe the most common. It's just ignoring the cash flow statement because it looks complicated. And yeah, it can be a little weird at first, but pushing past that feeling and learning to read it is one of the biggest power-ups you can give yourself as a leader. That's where the truth is. You know, when you boil it all down, getting a handle on cash flow isn't just good business, it's an act of stewardship. It's about integrity. When you manage cash well, you're protecting your people, you're making sure they get their paycheck, you're protecting your mission, making sure the doors stay open, you're honoring your commitments by actually counting the cost before you dive in. This isn't about being scared or restrictive, it's about being responsible. So, where do you even begin? I want to give you one simple thing to do. One question to ask this week. Sometime this week, just find your latest cash flow statement. You don't need to understand the whole thing. Just hunt for one line, net cash from operating activities, and ask one question. Is that number positive or is it negative? That's it. That one number is the start of the whole story, and it's your first step toward truly understanding the financial reality of your organization.